Let's talk about protectionary assets. An example of this would be investing in something like physical gold. Because when you're investing in gold, you're not hoping that this gold goes out and creates more value like you would a stock. Because when you invest in Amazon, you're hoping Amazon's going to create a whole new product, make bigger profits, and grow their valuation because it's a more valuable company. When you invest in gold, that gold just sits there and looks back at you. It doesn't really do anything. Now sure, there are some practical uses for gold in the world, but that gold that you have sitting in a vault if you're investing in gold, or sitting in your drawer, or sitting in your basement, it's not doing anything. It's just sitting there. And so the goal for the gold is that it is a protectionary asset against a worst case scenario situation. The way that I do it, again, I'm not telling you what to invest in. I'm not telling you what to do. I'm just telling you what I do. When I invest in physical gold, I buy a little bit of gold every single month. It makes up a small piece of my total portfolio, about 2% of my total portfolio. But when I invest in gold, I don't consider it an investment per se. I look at it as a way of saving hard money, kind of like hard dollars, hard money, because my theory is if I were to take $10,000 worth of cash today and $10,000 worth of physical gold today, and I buried both of those two things in my backyard today, and then 10 years from now, I go to dig up the cash and I go to dig up the gold, my theory is that the gold would have more buying power than the cash. So I look at it as a way to save hard money, and we know that gold has been a currency since the beginning of time, essentially, and so it has been a universal money around the world, and so for me, it is like that type of insurance, a doomsday insurance and a way to save hard money. It's not something that I really monitor the price of. I don't really care what's going on with the prices of gold. I know gold became very popular post-pandemic, after the worries of inflation, after the worries of people concerned about the dollar. It started to become a lot more popular. For me, it didn't really change anything for me. It was just continue buying a little bit of gold. It's not a lot, buy a little bit of it, and just keep letting it do its thing. And it's just a way to save some hard money as protection. That's why I call it a protectionary asset more than anything else. It's not a big piece of my portfolio. It's a very small, tiny piece of my portfolio, just in case, worst case scenario. And for all of you financial nerds, you might find this interesting, but my family is from a state in India called Punjab. And in the Indian culture, it is very normal that when you get cash, or there is rupees, when you get this cash, you convert this cash to something like gold because there's really high inflation over there. And so it's just normal culture that when you have a lot of cash, you don't want to keep the cash because you know this cash is going to lose its buying power. So many people just naturally convert it to gold. It's not really considered financial education. It's just normal because that's the culture over there. But this is where understanding kind of different parts of the world, how they look at different types of assets, you might find that interesting. Which brings me to number 4, speculative assets. A few examples of this would be investing your money into startups or cryptocurrencies or trading cards or NFTs or art or watches. What does this mean? These are things that can go up in value very quickly, but they can also crash in value very fast. And the reality is you got to understand that, hey, this is speculative. And this is going to play a specific piece in your portfolio unless you are very specialized in this, unless you're a very specialized startup investor, unless you're very specialized in the crypto game, unless you're very specialized as a person in the trading card business. You got to understand the game because many people will end up losing money in these places because they don't understand how the game works and they think that this is a place to dump their life savings, their life investments, when in reality it's a very speculative investment. Speculative means maybe it can go up very fast, but it can also crash just as fast. And it can be very exciting and it can be very fun, especially if you can use this watch, if you can use this Rolex in your day-to-day life. Hey, you're buying a $15,000 Rolex, but it's really an investment because you can be able to sell that $15,000 Rolex for 20 grand in just a couple of years. But maybe you won't. And this is the game that you got to understand. Don't go into these speculative investments thinking it's a guaranteed win. You got to understand the risk, higher potential return, which means it can also fall just as fast. I have invested in multiple startups, and many startups that I've invested in have failed, went bankrupt, or some companies that I never even heard from again. It is risky. The goal is you make a huge return, but sometimes you're never going to hear from them again. I have made a lot of money in cryptocurrency. I've been investing in cryptocurrency since before it was popular. I started investing in crypto back when Bitcoin was around $3,000, $3,500 a coin. Well, I have seen the rise, but I also know that Bitcoin falls, cryptocurrency falls just as fast. Yes, there's value in Bitcoin. Yes, there's value in blockchain. I understand that. That's why I have invested in it over the years. But I also understand there's a lot of risk involved as well. And sometimes people get caught up in the euphoria and the excitement, thinking nothing bad can ever go wrong. And guess who was the first to lose their money along with everything else? You got to understand when there's a lot of easy money floating around, a lot of these speculative assets can boom. But when you start to see money tighten up, when you start to see the economy slow down, which investments do you think people are going to sell out of the fastest? Is it the one that's putting a roof over their head, or is it something that is just sitting there that is losing value very quickly? And so you got to understand how this is going to play a part in your portfolio. For me, my speculative investments are about 16 to 18% of my total investment portfolio. So it's not a huge piece of my portfolio, and I didn't start putting much money into my speculative investments until I had established the hard assets and my paper assets, my real estate and my stocks. Those were the things I put most of my emphasis in, and as I started to build more wealth there, then I started investing a little bit of money into speculative assets. But you got to understand how it plays a part in your portfolio. If you're just getting started, maybe 10% of your portfolio in speculative assets, maybe 12%. But as you start to build more wealth, then you can consider putting more money into these, but just understand the risk. Now that we've covered speculative assets, let's talk about income producing assets. These are investments that put actual money in your pocket to fund your lifestyle. Here's a few examples of what I mean. If you put cash in a high yield savings account, maybe you're going to generate, let's call it somewhere between 3 to 4% a year on your money. So if you can invest $100,000, which is a lot of money, you're going to make 3 to 4% on that. $3,000 to $4,000 over a year in interest. Not anything significant based off of the amount of money that you have, but it is better than nothing. If you take that money and you put it into the stock market, well, there are some companies in the stock market that pay out dividends. And if you bought $100,000 worth of stocks today, maybe you're going to generate, let's call it 2 to 7% a year in dividends. Are there some companies that pay out higher dividends? Absolutely. Are there companies that pay out lower dividends? You got it. But somewhere between 2 to 7%, which means if you put in $100,000, $2,000 to $7,000, which is, again, not a lot of interest based off of that amount of money that you invest. Now, does that mean that you shouldn't invest for dividends? No, I love investing for dividends. The way that you actually win in dividends is by investing consistently for the long term, because as you keep investing more money, so the money that you're getting in dividends each year will hopefully keep growing as you keep investing more money to buy more dividend cash flow as well, because as companies grow their profits, they will hopefully pay out bigger dividends as well. So the game here is for the long term. But let's keep going just for the purposes of the example. If you're investing in real estate, let's call it 5 to 8%. Again, is it something that's going to change your life today? Well, not necessarily, but as you stack more real estate, it can be very powerful. When we talk about income, I want you to understand the reason what I'm trying to get at today. The point that I'm trying to get at today is having a business, having a cash producing business is really where now you can supplement your lifestyle and supplement how much money you're investing, because these are places that can make you rich when you're already rich. Or these are places that you can take your money to produce some additional side income. This is where you can put your time to generate more interest, because there's an infinite level of return that you can generate from your business, because there's no real limit. I mean, you can start a business for $500 and maybe it grows to a $10,000 a year in income, or $100,000 a year in income, or $1 million a year in income. There's really no limit there. I mean, I talked about today, I run a company called Briefs Media that was funded through Minority Mindset. And I started Minority Mindset with an investment of less than $500. I know it was a lot less than $500, but I like to save $500 just so I have a big enough cushion to cover everything. But I started Minority Mindset with a $25 or $35 tripod, a $25, $35 light, and that was it. And then slowly we started to grow, we started to make some money, to use that money to start Briefs Media. We started to hire employees, we started to get better softwares and better things that we're doing. But it all started with a smaller investment, which then created a new income producing asset, a new income producing business, where now I can use that money from the business to go on vacations, or I can use that money to invest into other assets and invest back into my business. But the point that I'm trying to get to is the way that you build wealth is by owning these investments, owning real estate, owning stocks, owning some speculative assets, owning some protectionary assets. But you got to have money to invest into those things. And maybe you have a job right now, which is great, but you can also look for additional ways to create new incomes that we have our money to keep investing. I am not saying these things are bad. In fact, I love investing for cash flow. The majority of my passive investments, and meaning everything outside of my business, is cash flow producing. That's rental properties that are paying cash flow. It's stocks that are paying with dividends. But you got to understand, you have to have the money to go out and buy those things. And that's where having something like this, or being very strategic with your income from your job, can be very good. Now, if you're not making enough money from your job, that's where you can consider getting a second job or starting a side hustle. But just understanding the game that you have to have an income that you can dump into the investments. That way you can produce more income, that way you can produce more wealth, because wealth is ultimately when your money is going out, producing that wealth by working even when you're not working. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.